It's not coming. It's not coming. Get over that recovery day. And that's the mentality I took with me. And what happened through that process was all the frivolous things of life started to float away. I used to tell people lies so they would like me. It's because I was so insecure. When you start to build yourself up, and start to have the one thing that we don't have is confidence.
Yep.
Real, authentic confidence from hard work. Everything else goes away. You no longer look to other people for your self-esteem.
Validation.
That's right.
Yeah.
You now know. I walk in a room now and I know the hours and years and decades I put into David Goggins. That's something, it's not on the wall. It's not a trophy on the wall. It's not a medal on your neck. It is actually a feeling in your heart. And people go, why don't you ever smile? I don't have to. Yeah, I do have a stoic look on my face. I'm a very focused person. But the feeling I have in my soul and in my heart, that's why I need to smile. Where I got my work ethic from was the hours I had to spend learning this. When you sit down and you're not smart, and you have a disability,
Yeah.
and you still want to be at the top of your class, I didn't want to just get by. When I realized that I can learn through hard work, and I can beat the valedictorian in school, but I got put in 10 hours more a day than he does. You know what kind of strength comes from that? When you're sitting down, that guy that valedictorian studied for an hour, and you know I caught you, and I am dumb, but I have the work ethic to catch you. That's where David Goggins got really invented.
Yeah.
Was at a kitchen table with 20 spiral notebooks that were empty. And then 3 months later,
Down. Yeah.
they were full. And when you can go through that, I still have them in my storage unit. You go through these spiral notebooks of your life, and you realize this is how I learned. This is unbelievable. There's no miles. It's not about the miles. It's that, having a discipline every day to say, for me to learn this one math problem, it's gonna take me 10 hours. And that's where and you realize through hard work, you can outwork anybody, no matter how badass they are.
In our current world, but how can we save ourselves every day? When you look around at the world, when it looks sometimes like the world is going insane, when people are going crazy, you have to kind of work to save yourself every day. You have to pull yourself back into sanity and back onto the path, and not allow yourself to become a prisoner of your own personal gulag. And these gulags, these Soviet gulags, if you want to build your own personal gulag in your life, you do it the same way that the Soviets did it. You do it with lies. Lies on top of lies. And the Soviets lied on top of lies to build these gulags. And in your life, if you lie to yourself, if you allow that to happen and you put lies on top of lies, you will build yourself your own personal gulag. So, don't allow it.
What's up? What's up, everybody? Can everybody hear me? Type 1 in the chat if you can. All right, guys. I am in an extremely amazing mood. Hope your guys' weekend was awesome. I know mine was, especially, sorry, Irish people, but McGregor getting whooped gave me a little bit of a nice start for the weekend. It was phenomenal. but not because of anything. I just like karma is a bitch, right? So I like arrogant people getting what they deserve. So, but he was really good. He took it. He took it well. I was impressed with that. Um, the defeat. I mean, speaking of defeats, if you are losing, I'm glad you're here. And if your friends are losing, invite them here because they need to hear all this. But then my weekend got a little bit worse about 2 hours ago when Tampa Bay whooped Green Bay. I was hoping Green Bay would win, but anyway. So I hope everyone's going good. Sydney, Australia. What time is it in Sydney? It's early, right? It's like morning or something.
They're like 13 hours from us, I think.
Peru. What's up, Peru? Nice. I need to get in the flow of things. 12 p.m. That's not bad. I know people from see, Mr. King over there is from UK, and Miss Summers or Mr. Summers is from London. That's dedication. 1 a.m. and you're here. Appreciate you, brother. All of you from Europe, from anywhere in Europe is like I couldn't do what you guys do. But appreciate you all. Thanks for joining. If this is your first time, welcome. We do things a little bit differently from other educators, I guess. So first of all, just have to say this, for legal purposes, everything you see here is strictly Ryan's and mine opinions, right? We're not financial advisors, no, we're licensed anywhere to give financial advice. So all of this is based on opinion only. Take it with a grain of salt. So nothing can be used against us, court of law. And then second thing, if you like what you see tonight, if you like anything you see tonight and you want to partner up with us, ask us any questions, get to know us, join our squad, do whatever. Yeah, Ryan, can you put in the chat? Let me put it on the screen here. I'm gonna put on the screen the our Instagram tag. So don't be a stranger. Follow us, reach out to us, whatever. So I'm just gonna put this here for now, so we get that out of the way. Boom, boom, boom. Okay. So those are the Instagram handles. And then if you want to ever watch the recording, which I need to start recording. Holy crap, almost forgot. Record. It's going to live on YouTube. We're streaming live on YouTube. So if this thing fills up, or if you want to see the recordings at any time, you can just go to YouTube, search Furious Snipers LC, and it should come up with a live link or a recording from now on. Don't ask me for a recording. I'm not going to give it to you unless you're in our squad, like a private recording, but you'll be able to see everything on YouTube. All right, so let's dive into it. The way we do things is I usually talk about mindset a little bit of some kind, and then we go into stuff. Today's topic, I want to cover a couple of case studies. I want to cover GU as a pair, and I want to cover US 30 for those who like indexes. So we're going to break down what happened last week and show you what to expect the coming week. So basically give you sort of a signal or what to expect in the coming weeks. And I'm going to just break down on a general level. Obviously not going to go into specifics because got to save some sauce for our squad. But on a general level, how everyone, I think, on our opinion, again, should approach trading. So I want to talk about how one of the reasons, well, there's a ton of reasons you technically lose trades. If you lose trades, everyone loses trades, right? And the biggest reason, I think, like I said, last time, is the this want inside of us to just make money right now, right? Make money tomorrow. I need to get on the straight. I have FOMO. I need to get on the straight. Or I just lost. I need to win just to make my quota of some kind, percentage wise. This constant notion of I have to trade right now, because if I don't trade, like the President Biden will no longer be president. It's like, it's not the case, right? So I always say this, right? Like, chill the fuck out is what I say. And it applies to me too, right? Chill the fuck out. Like, just take a breath, take a deep breath, whatever your routine is, and calm down, right? Have you ever heard the saying of, slow ride, take it easy? That goes a long way, no matter how cliche it sounds. Like, I can guarantee you with 100% certainty, people like Mike Azevedo, people like Sam, people like me, people like Ryan, people like, anyway, any mentor went through this as well as everyone, and came to the same conclusion. Any good trader comes to the same conclusion, that one quality trade is 10 times better than 20 bad trades, right? I don't want to be stressed, and that's what this chaotic, I just need to get the money gets you. It gets you nowhere. Like, last week was the big change for me after the Ask a Mentor with Mike Azevedo. I started recording every trade. I started taking notes, taking screenshots. I have 3 folders full of screenshots, over 40 pages of notes that I took from a week of backtesting. And I'm a mentor, and I do this thing professionally, double sponsored, but for a year. So I still need that, right? Because I get into the, oh man, I didn't make my 10% today. Holy crap. Then overall it's gonna end. So when you're at a 9 to 5 at work, you wait 2 weeks. You wait 2 weeks to get paid for 40 hours that you worked. So if you're on the chart for not 40 hours, but for maybe 2 hours in a day, you all of a sudden expect that you're going to make a crap ton of money. And I'll backtrack that and say, what if I spent 40 hours and took one single trade, and that trade made me more money than 2 weeks of work at my regular work? What if I was patient enough and get in the trade that had all my confirmations I want, and I wrote it down, and I wrote down how I feel, and I was completely calm, and I was okay with the fact that if I lose, I will lose 0.25 of 1% or 1% or whatever it is your risk management entitles. And then I lost that trade and I didn't care, but then I took the second one and it made me 20%, and that was it. And I took one trade a week, and it made 20%. Wouldn't that be better than worrying about, oh my God, what if it hits my stop loss today? Oh my God, I'm gonna, my kids, like, I don't have enough to pay with, because I put all my money on this trade, and so something like this. Like, there's absolutely no explanation why are you losing if you're following the proper risk management and you're chilling the fuck out. Like, and there's no stress at the same time. So something Mike Azevedo said, what did he say? Man, now I just lost my track of thought. That's great. What did he say? It'll come back to me. Anyway, so bottom line is, if you follow your plan and just relax and look at the markets as the way we're going to show you. Well, he said that, but that's not what I can't remember what I was going to say. There's a point to this. Oh, that's it. That's right. So if at any time, if you tell me, you know what, I lost and it hurt and I lost 5%, and I'm going to tell you, okay, tell me how you lost. and you can't come back to that trade and tell me exactly why you lost, and your answer is, I don't know, it's just for some reason market clapped me, or it just wicked me out and went the other way, or oh, it's just the market is against me or something, like it feels like that, then I am going to like, oh, well, I have no more questions further, Your Honor, because you have no idea why you lost the trade. Unless you have an idea, if you have an idea that you're losing trades because you're rushing in, or you have FOMO, or you're over leveraging, I mean, that means you're not being serious. You're lying to yourself. That was in the clip that I played before the stream. You lying to yourselves about how you're trading, right? And if you write down the things of why you entered, just write it down on a piece of paper, even if it's not journaling. Then you know for a fact that you have nothing to be scared of, nothing ashamed of. If you took a trade based on actual logic, as opposed to because Joe Schmo posted on Facebook a signal that you took, or because Daniel or whoever at Trade House is killing the markets and you're not, and you're just jealous, and that's why you took a trade. That's not a very good, like, be serious. This is your money, right? Stop it. Stop this. Block out all the noise. Block the hell out of Facebook, out of other people. Find a mentor, follow him. Work. More work, less trading. I probably spent 16 hours before Thursday hit, before Thursday morning. And then on a Thursday morning, I took the US 30 trade and GU trade. That was already my fourth and fifth trades. And those two trades are still making me, I'm going to hold it until it gives me 50%, probably. But I studied the hell out of markets and back tested for all this time, and I wasn't trading. And then I took a trade. It took a second to take a trade, and I was so happy. You have no idea. And it's all because of the work, right? You can attend these things. You can find a favorite mentor. You can attend and listen to lectures and have stolen material and look at leaked material. You're never going to be good. You're never going to be good unless you spend the time on the charts, charting yourself. If you want to be an independent, successful trading, if you want trading to be like 15 minutes every morning, like Mike Navarrete does or something, then spend time on the charts. Backtest what works for you. We just discussed it with Orion. We had a meeting that went over long, and we just discussed it. The fact that if you don't backtest, if you don't do this, there's not going to be results at all. And we also discussed the fact that you can have any strategy you want, even retail, and be successful if you practice it, especially with smart money. And when it starts clicking, it's going to be easy. You're going to have less and less time, unless you're working on something new. But anyway, so questions, comments, concerns on mindset of chilling the hell out and not rushing the trades. You own me 5 points, bro. What? Yeah, you own me 5. Albert, I'm not sure what you're trying to say. No, I know he trades opportunities, which is the same exact thing that I do, right? I don't really say, well, first of all, I like certain pairs just because of the way they move. Oh, sorry. You own me 5 points. You owe me, you mean? Was it a misspelling? I mean, I owe you 5 points. Anywho, so there's no questions. Oh, by the way, I think Ryan mentioned it. If you have questions, no, I got you. In Q&A, please post the questions in Q&A so I can see them. And Ryan will try to answer them if he sees as well. Okay, so let's look at the charts. Let's look at the charts and show you some magic. So I did do the Furious Monday last week because, and we kind of discussed the beginning. Albert, we're gonna go through. What do you mean show you backtesting? You want the notebook with all the notes, or like I'm not gonna spend time in front of everyone to do backtesting, but we kind of gonna go through this right now. And I'll show you how I want you to trade. And it's the same way you backtest, really. So are you guys watching my chart? You see the GU, Ryan? Can you see GU? Yeah, okay. Yeah. So
Yeah, we're good.
if you can see, I have marked out all the structure on GU in here, right? So I'm not saying you should always do this, but it, once again, something I saw on with Mike Azevedo in his charts, and you can just do, you know, something like this, and do the structure this way. But I think this is going to be way cleaner if you do this. But anyway, so we always start on weekly or weekly chart. So this is what I was thinking last week, right? Oh my God, stop this. Last week. So from this chart, if we go back to last week here, like this, here's your back testing, Mr. Albert Latorre. So if we go back to this week and go to weekly, we can totally see that the structure is bullish. So the first thing in any of my markups or my Sniper's White markups, what we do is we look at structure from the week ahead. So if I look at this week, what do you guys see? I can show you. I mean, it's the same thing right now this week, but I see that we are sitting right here, right? We're sitting right here, and we got all of this imbalance, and then the distribution over here, and the manipulation candle over here, right? The move of the market up before the move down. So all of this is the area where smart money, which by the way trade on higher time frames, got into the market. The big banks, literally, this is weekly chart, so this is insane sell-off that happened in 2018 in April. This is where they got in, right? They've been holding this position for a long time. So when the market comes back here, this is going to be the huge sell-off like this, right? So this is what I saw on weekly. We're super bullish. There's no reason to sell this. Then we come on daily, and this is again confirmed. But as soon as I looked on daily, this was, well, I can't see the time, but you see on daily, we got into this low to high. And if you mark out structure, you have low, a high, a low, a high, a low, a high. And this got in and completely mitigated out of this candle on the daily, and had a huge reaction up. This is on the daily, this is what, like 70 pips up, and it's only like Sunday. So I was like, okay, I think we are in the area where the market should go up, because we had the reaction. So now I should look for some kind of area, either a schematic or just a retracement, like an IFC, institutional candle, order block, something here where I can get into the market. So as you coming down to 4 hours, then you can see we're here, but we're still haven't mitigated. Now, if I look here, I can see this candle, and this is still 4 hours, right? I'm still not looking for a setup. I'm just trying to understand what the market is giving me, right? We are bullish on here. This was a low, a high, a low, and then this is a high, but this is an equal high. And what I can see from this that this is a reaccumulation schematic. For those of you who don't know, look it up. What a reaccumulation schematic looks like right here, starting to build, on my opinion. And we have a target because these are on a higher time frame equal highs. So where are we at? We are at this imbalance. We're at in the evening on a Sunday. Monday was supposed to be a holiday. So I knew that because this wick here comes to the wick, which is called a breaker model, which we're gonna discuss on this call a little later. What a breaker model is, this is a liquidation area, so this is taken care of. So the only thing we have to worry about is in this area here, after this imbalance gets filled, this would be the area that I'll be looking for a buy, because this is a previous reaccumulation on a smaller time frame, fractal. So we go to 1 hour, and now this gives me a lot more more confluence. I can see this area right here where it could probably react from, and I can also see this area right here that is possibly an entry. This being a breaker, this being a source. Cool. So as we go through, and then I go to 15 minutes, which is where I look for my setup. So my second thing, after I analyze the market, I'm going to mark out my POIs. So I already erased this since last time, but it's okay. I mark out my POIs and I create my alert. So in this case, I create an alert over here to see what market is doing when we get in this area. So as you know, then I went to bed. Obviously, I wake up later. I wake up at 6 a.m. Central Time. This is Central Time, this chart. So fast forward there, right? Fast forward there. Okay, so we're here at 5:30. Now, technically, usually I wake up at 6:30 in the morning, and you'll see the trade that I took at 6:30 in the morning, or a little later at 7. But in this case, I had an injury and neck injury, and I couldn't sleep. So I actually woke up earlier. And the second thing, the second it enters my POI, which was right here, I look at divergences. Now, for those of you who know me, divergence is my baby, right? We're gonna have webinars on divergence. What time is where you live now? It is 7:36 in the evening. How do I determine that POI? I just explained. Okay, let's go through this again. Here we have a reaction, boom. Here, because before this got drawn even here, I showed you that this right here comes wick to wick. That to me is mitigation, right? And then here is the reaccumulation with the imbalance here and imbalance here. This is the order block. For those of you who don't know what an order block is, it's a last candle with the last candle that gets engulfed with imbalance. I'm going to repeat that again. It's the last candle that gets engulfed with imbalance. So here is the order block. This right here is where the institutions sold some shares, so got some profits and reaccumulated so they can move the market. You can see how the market explodes from this space and leaves all this imbalance. So that's how I knew that's my POI. And on a smaller time frame, you can totally see that after this imbalance is filled right here, it's gonna come back with lots of stuff. But right here is the order block. You see that? Last candle that gets engulfed with imbalance right here. So that was my POI. Okay. So my alert was literally right here. This is how I trade, right? My alert was set here and woke me up. Technically, but I wasn't sleeping that night. Anyway, so I go to 15 minutes and below to look for divergence between pairs. So in this case, at night, I actually went onto 3 minutes and compared this to GJ. And for those of you who understand divergence, could probably see it already. It's very clear. Right? We have GJ taking liquidity here and then mitigating out at this point where we got into the POI at the lowest point, right? We have mitigation where this one was taking liquidity. So because this one is mitigating, that's where I took the GJ. I just took GJ and I went back to bed until I woke up later. And you go to 15 minutes to when I wake up. And GU versus EU is the most common divergence, right? So if you look on 15-minute of what happens next, come on. As we go in, boom. You guys see it. Right? EU was making lower lows. So was GU until here. I was already in GJ from there. And then this is what we're analyzing here, EU. It hit my zone, then broke the internal structure. The order flow was broken, mitigates out of here. We have divergence, boom. To that, we can add something else called Wyckoff accumulation right here, right? I believe this is the actual schematic B, and this is the STB in phase B, and this is the LPS, right? The last point of support. The reason I believe that is because there was no shakeout that was crazy, right? This is not that much going down. So to me, this is just a last grab of liquidity, which is just an STB, ST in phase B. Boom. And then LPS. Now to that, you can add all kinds of confirmation. You can see that this is 1.3520, which is the 20 level. For those of you who don't know quarter point theory, look it up. It hit it directly, like perfectly on the spot here, right? It also is on this time frame, on 5 minutes, a break of structure. And if you use fibs, you can enter off the fibs. Here's your 71 ICT kill zone. Any confirmation you want, it was there. It was the easiest trade of the century. Like, you cannot miss this trade if you know what you're doing, right? On GU and GJ, you could have missed. This one was like no excuse to miss. So I woke up at 6:30, at 6:50, 20 minutes later, I was able to take this trade perfectly. No drawdown, let's go. And you know, what happened next was history kind of thing. We exploded. And what am I targeting? What am I targeting? Well, if you remember what I said on the higher time frame, this looks like reaccumulation when we were starting this thing. This is reaccumulation, these two. So this right here is like 150 pips, 150 pips for risking what I risked, which is 3 pips of risk to go 150 pips. That's 1 to 50 trade taken on a freaking Monday morning. The week didn't even start yet. Usually I don't trade till Tuesday. You have this trade, you win this trade. If you're risking 1%, which I don't, I risk quarter of that. But if you're risking 1% on your trades, that's 50% of your account in one single trade. Now you tell me, if you did everything that I just showed you, that you're going to take this trade, and when it claps you for 3 pips, you're going to be upset. I'm not going to be upset. I'm going to look for reentry, and if I'm clapped second time, I'll be like, okay, I missed something. But this story that I built makes total sense. So whoever was asking the question, Albert Latour, does that make sense to you? Does that qualify for your back testing? question. So just to show you what I think right now for the future. So then I actually, before I do that, Thursday was the next trade I took on GU. And this was, well, a lot of things, but was there divergence? I can't even remember anymore. Yeah. Okay. So there was divergence once again here. Right. When I got up, 6 in the morning, 6:30 in the morning. When do I trade? Up until probably 1 o'clock. But anyway, so divergence was there. And what I was looking for, I actually didn't take the trade here because for my divergence confirmation, personally, I need to break a structure, which is here. So instead, what I was looking for is the break of order flow, which happened here when we failed to make a higher high than this. And we grabbed this liquidity, but mitigated from the top order block there. So I took the trade over here, a perfect snipe there. This is where divergence alone was not enough. Of course, this also confirmed that this is, this actually to me looks like another reaccumulation, and this is the Greek, and we're going higher now. That's what I thought at the time. I'm not sure anymore. Maybe this is a distribution, but we'll see in a sec. But at the time on Thursday, I also thought this is reaccumulation, but this is the time in the reaccumulation stage where we go down, right? And we need to come to the low, at which point you can take a buy, because here's the perfect order block once again. And this is reaccumulation. It makes sense that it would go up because low, high over there. Just follow the structure, stay with the trend. Cool. So where are we at right now? So I took that trade. I didn't take that trade because this was my US 30 trade, which I'm going to go into next. So if we look at the daily, right? I can delete that. If we look at the daily, we are still remaining bullish, right? We're still remaining bullish. Here's the candle from last week, and now we're here. So just from the daily, if you look, it could definitely, easily come and mitigate from that push that mitigated out of here, right here. Right here is the spot, the sweet spot. I also noticed something from backtesting, the following. If you look at the last many weeks, like many weeks, last few months, you will notice that the low of the week on, what is the lowest time frame you analyze your charts on? I get in on 1 minute, sometimes on 15 seconds. But my big analysis is week to 15 minutes, and then I look for setups, divergences on 15 minutes, if it's indexes on 5 minutes, and I execute depending on the time of the day. And if it's sometimes it's pending at extreme zones from the source, like you see here, the stuff here, like what I just showed here on daily. This is on daily. I don't take setups on daily, but let's pretend this was 1 minute. This would be the extreme from here or somewhere in this wick. So I would put a pending in the extreme zone, if you know what extreme zone is, and then market execute if it's not an extreme zone, but in a breaker, in a decisional place. I would take the trade sometimes as small as 15 seconds, but I market execute, and it just depends on the pair. Usually on GU it's 1 minute. On GU it's 1 minute. I usually don't go on GU less than 1 minute, but it just depends on the pair. So on NASDAQ, it's definitely seconds, because that one thing is crazy. You don't want more than a few points of stop loss. Okay, so what was I saying? Oh, yeah, so on a daily, you can see that there's a space here. And you can also see that, let's go to 4 hours. Lowest formed Sunday night, Monday, right? Lowest point of the week, right? The low of the week is formed on a Monday. The low of the week is formed on a Monday. The low of the week is formed on a Sunday. The low of the week is formed on a Monday morning. The low of the week. So it just keeps doing that for so long. Usually the low of the week is formed by Tuesday on like EU pairs and stuff. But from just backtesting this, like since this point, which is what, 2 months ago, every single week we start the low either on a Sunday or a Monday in this whole uptrend motion. It's always been Sunday or Monday. So it kind of makes me wary and like makes sense that it might actually come down from where we are right now. And by London or by tomorrow evening, come into this area, right? And form the new low of the week, mitigate out of this that you can see on daily, right? And you can see on 4 hour here, the POI, and then explode up and, finish the reaccumulation that it started, right? Because everything here, this is not structured. We are not at a structural point. This is the low on a 4 hour. This is the high. So if this happens, that market decides to do this, if it happens that market decides to do this, all of this internal downtrend is nothing more than a complex pullback until we break this point, right? Until like, to be honest, until probably we break this point. But I think we break this point because this low leads to this high. This low is what maintains bearish bullishness, as Mike would say, right? This low maintains bullishness. We break this low, we're now bearish, and this becomes a target because this point, this is all mitigated now, and this created that. So all of this until we should mitigate here. If we don't, it's for later. But if we break this point, this structural point, let's say mitigate, come here and break this lower, then they're switching their agenda, which on the weekly, if we look now on the weekly, where are we at? We're in the middle here. I don't see big banks just saying, you know what, we filled this first little imbalance and we're just going to take the market down and not get out of our drawdown, not mitigate out of the scandal. So I think we're going all the way to here, which is another 300, 400 points or pips to get there. So I'm bullish. I just want to wait until we are in the POI again, right? Which is here, most likely. Now, if we drop down, if you look, we did mitigate out of here, and this could be reaccumulation, so we could go up. But then I am asking myself a question, why are we not moving? Well, besides the fact that it's Sunday and market doesn't move really usually till Monday, but why are we creating this liquidity here? What we're doing is we're trying, if you look where we are at this resistance area, so to speak, for retail. So what they're doing right now is literally sucking in all the sellers, right? They're trying to get people to sell right here because we're chilling here and we are in the area. I should probably use a new chart, but whatever. We're in the area here where the market dropped before, and people that don't know how to trade, which is most of the world, they sell here and rush in, and the institutions and the funds, they rush in, the other institutions, all the smaller institutions, right? And they start selling here. They start selling here, and they show them that they're correct by moving the market this direction until they mitigate for real, right? Somewhere out of here, and then jump higher, right? Once they mitigate out of here, now they can take this liquidity they're building now and go higher. So that's what I think is going to happen. Because if we go down, if you're not in this trade from Friday, if you are, you should be in stop loss and profit. But if not, I would wait to see what market will show you, and not rush in, chill the fuck out, like I say, and not rush into the market. And just let it show you what it's doing. If it decides, you know what, I have had enough, I'm gonna make another low, maybe sweep liquidity and come up, then I would wait to a higher high, retracement, and go. But most likely it's going to come down, making it look like we are, for some people, in distribution, for some people at resistance, and whatever, they're winning, whatever. But they will take and do a complex pullback into here before buying. So what do? I'm gonna put an alert right here to ring the alarm and send me a message if it crosses this line. And then I will look for divergence, and then I will look for Wyckoff, and then I will look to enter this tomorrow morning or to Tuesday morning or whatever, whenever we get here. If I am missing out and this thing just gonna go here, just grab quickly liquidity, and for some reason, you know, I don't know, find 5-second mitigation out of this wick or something weird stuff, or if it just decides to explode after accumulating here forever during London, I don't care. I can't be in every trade, and I am completely fine with missing out. I am completely fine because I know market will show me something else. Questions, comments, concerns on GU? Gone once, gone twice, gone 3 times. Okay, so if there's no questions, let's go to the US 30, which was, as some people would say, Bay. US 30 was Bay.
Lord.
I don't even know where it came from. I just thought it would be funny to say.
We're in trouble, folks.
So yeah, I just saw this. It's crazy. But anyway, so I didn't really get into US 30 until Thursday, right? And Thursday was absolutely beautiful, and then Friday was even better. I was like, oh my God, this thing is amazing. Do you include seasonality? It's better to be bullish for months. What are your thoughts? Was 2022 different to support that? Thank you. Ingi, very good question. So I think seasonality is important, but definitely not as important as understanding the market structure and what it's doing. On top of that, last year we got into a pandemic, and this year we have crazy presidential elections. And so DXY, with the new stimulus, if you want to go economical on me, fundamentally, with the new stimulus, Ryan, can you hear me? Kind of frozen. All right, cool. I just don't want to lose the connection. Right. So what does stimulus do, right? Stimulus is giving people free money that is printed out of thin air that are not earned by any means. And then on top of that, they're boosting unemployment by, what is it, like $400 a week. So it's $1,600 extra for people for not doing anything. So tell me economically, what does that mean? If somebody is like, hey, I'm going to pay you $1,600 a week plus whatever you get on unemployment anyways, or 1,600 months, who wants to work? Nobody wants to work. It's free money. I'm just going to milk the unemployment all I can, is what most people would say. So what that does is has kind of this facade of stimulated the economy. What it does is inflate the stock market, like basically out of thin air, because people all of a sudden going to start shopping. Where do they shop? Amazon, Netflix, all these companies, Disney Plus. People say, oh man, I don't have to work. I'm just going to like subscribe to these services. So their stocks are going up. Groupon, all these things, right? So companies, corporations, they're making money because people are spending money. They don't have the education that me and you have, right? That they don't have the guidance that you need to invest. They're like, oh yeah, let's get our let's spend our money, buy clothes, buy food, buy whatever, buy new cars, like whatever it is, pay off debt. So like all this, which is not bad, but I'm just saying they spend money on things that don't make them money. which stimulates the economy in the way of these stocks without actually gaining value from the company standpoint, because they're not doing new researches, new developments, or anything. It stimulates the economy in that way. But at the same time, it makes the dollar worth nothing, because they, you know, there's no, they didn't earn, right? These dollars have to come from somewhere. So the dollar falls. And so in this case, I think seasonality is bogus, right? Because you can see the market is bullish as hell. We're bullish. So just because seasonality says usually we're bearish, that's not what the market tells you right now. Structure is still king no matter what. So I'm going to trade structure. And then if structure turns bearish all of a sudden right now, then I'll look at seasonality. But to be honest, 100% honest, full disclosure, I don't even look at it anymore. I don't care. Because seasonality based 20 years ago, the economy and everything was not even close to what it is now. There was no $6 trillion every day in Forex market. There was not even computers half as fast, right? 20 years ago, .com boom happened. So it was like a completely different environment that we're trading in. There was no, I don't want to get political and take sides, but there is no COVID conspiracy to, basically shut down all the small businesses and have corporations prosper. There was none of that. So ignore it. My short answer is
there's many levels of this, but we have to understand we were under different times too. Brexit didn't happen before, we have the COVID thing happening, of course. Seasonality, obviously, have it in the back of your mind, but don't trade because of seasonality, because essentially what's going to happen at the moment it becomes bearish. Guess what's probably going to happen? A divergence, and we'll jump all over it.
Right. Here's another thing with seasonality. Seasonality is based on the daily time frame. So this is primarily used for swing and position traders. We're here intraday trading. So for intraday trading, seasonality is, unless you're trying to catch the top on the daily, like Ryan said, divergence, seasonality is useless for intraday trading. For trading within a week, seasonality is useless.
Let the market show you what it wants to show you.
Right. Just pretty much like a sentiment, which is useless for intraday trading, which is why you got to trade technicals. Okay, so with Dojo, am I sharing screen right now?
Yep, you got it. Yep.
Okay. So here, once again, on Thursday, this grabbed a whole lot of liquidity. And we started to slow down. And if you can see this rounding off effect, the order flow started shifting. This last order block, this last institutional candle that created the highest high here, got broken. Right here, this order block gets taken. This internal structure here gets taken. So the first entry could have been here. You can also see that this is, I don't know if this is correct. This is me marking up distribution the way I saw it, right? So to me, this here is a UT grabbing this liquidity. This here is all different secondary tests that created liquidity in its own, that took liquidity from the buy and climax that for some reason Yuri just ate and it's not here anymore. It's buy and climax, right? So it's taken buy and climax liquidity, then it's taken ST liquidity, then it's taken UT liquidity, break a structure, order flow of internal structure, break of order flow. Now we're mitigating from the top, not from the bottom. And then perfectly came down here. And I was, again, this is outside of my trading hours, so I can smack myself, but I wrote everything in my journal. This was just too bad to miss, because I was not in a trade and I missed this in the morning. So I really wanted to come to US 30 and make something happen. And when I saw this, what's an order block? It's the last candle that gets engulfed with imbalance. Um, obviously, I actually put my stop loss here, not here. I didn't know if it's gonna go here, but you could have just made one more pip and whatever. And it obviously mitigates out of here and comes down, right? So easy trade, perfect trade, amazing trade. But what actually made it really good is what? Divergence with NASDAQ. Really? Boom. It was clear as day to me, and I posted it for everyone in my group that we have it. This is called a hidden divergence. So it's not a straightforward divergence, because when this made a high, this actually made a low. And if you traded London, you could have gotten mistaken that this is divergence to the downside on the NASDAQ. But somebody please tell me why this is a bad divergence right here. Right here. Why is it a bad divergence? Why would you not take, somebody please answer me in the chat. I'm not seeing the chat here. Chat. All right, somebody needs to put the answer.
I gave you guys
Thank
a
you,
list of
Mr.
rules.
Johan, I should exclude you from answering. Damn it. You know. Somebody else. Okay. Thank you, Johan. Yes, there's no break of structure, right? There is no break of structure. If this leg before coming back, first of all, it didn't really come back either. So we're not really mitigating out of anything here, which is the second rule, not being whatever. But if you saw this diverging thing, the main thing is it didn't break structure over here. But the second thing is we're not really mitigating out of, well, we could be mitigating on here. I guess we could be mitigating if you do it this way, but we need to break structure and we didn't. So this would have been bad. So what's the actual divergence? This is hidden because it makes a high and then a low. And because of Wyckoff, because of order flow switch, this makes this divergence amazing, because we had 1, 2, 3 signal, basically one high, lower high, lower high, with this low being lower than that, confirming that we are shifting order flow and structure and going bearish. So I sold here, and my again, you got to look at the whole market. My profit was actually lower in here. Oh yeah, it did reach there. Never mind. So yeah, my profit target was here, because this is the first level that we need to get to. Imbalance, last candle gets engulfed by imbalance. Boom, we have a reaction up, failed to break. Order flow is still bearish, so we keep going. It went to the source perfectly, had a reaction, and this is where I took my profit, because why? Because I see, number one, a lower POI, number two, these lows here. I don't know if we even took them, but I saw this as a danger zone because we got equal lows here and liquidity, so I decided to get out. And then the next morning on Friday, as I get up, I see the following picture, right? I see the following picture right here where you see my snipe there. This was the re-entry, which is perfect. Once again, NASDAQ. Very ugly NASDAQ, but still NASDAQ. In both of those, you can see the rounding off. You can see the rounding off. Now, something about indexes you got to know is 90% of the time they're bullish. So you got, I'm way happier about getting a buy on indexes than a sell, always. That's just something to keep in the back of your mind. But I think this is even on 5 minutes that divergence was. Yep. Okay, so now here you can see it clearly. Boom. Right? We're moving down, making lower lows, lower lows, lower low, higher low, perfect divergence. We get in. on here. And then I was watching the market every minute on a Friday because I didn't have to work for the most part. And I was slacking and at my actual 9 to 5 that I still have to attend sometimes. But anyway, so I was watching the market literally everything. So as it failed to make this, I was like, oh, okay, so we're gonna come here and mitigate one more time. So I'm going to set. So I'm gonna be watching this closely, and of course, I got in re-entered here, stop loss under the wick. I don't know if you can see this wick here underneath there. So it perfectly went to this order block, to this institutional candle here, mitigated, and just went up for the rest of Friday. And now we're here. Started from the bottom number here. So I'm still holding this position. I'm gonna hold it forever until we get to this distribution, which if you can see, this is where the order block is. This is where the unmitigated thing. So at the very least, we should have a reaction there. We could have a reaction and keep going higher, but that's where I am taking profits right over here. Right, that's where distribution actually started, from this last point of supply. And this is where I'm going to be looking for divergence to see if we're going to come down again. But this again right here, what are we doing? We're getting sellers into the market. We're holding them here. Why? We're manipulating the lows. We're doing these shakeouts. So we do what? So we go up. So this is again accumulation or reaccumulation, whatever you want to call this. Is that a possibility that we can come and smack this low? I think so. I think it's actually what's going to happen is, as you can see here from last week, I marked this up. We have another area right there. Last candle gets engulfed with imbalances right here. So don't be surprised if this level here gets revisited, given the seller's confidence, taking the stop loss from this wick that people think cannot be destroyed, which I can tell you it can, do this complex pullback that they're doing, and then enter, probably London. It's going to come down, enter at the low of the week, come up and destroy even this low, probably have a small reaction and keep going up higher. So because I got in here and here, I should be okay. And partials, of course, already taken. But if it comes here again, I'm gonna re-enter if it gives me an opportunity during New York. I'll see what it does during London. But this other thing I didn't talk about is how perfect this was on a Friday, because the market literally took the Asian lows, and this distance here of the Asian range was perfectly equal to the distance here of the Asian, like one standard deviation of this is exactly to the pip of where this low thing is. So like, let's say this is 80 points and this is 80 points down before we come up. So this was like, again, textbook. I don't know how many concepts you know, but textbook trade here as well. And all the confluence that I need is Wyckoff, divergence, and again, starting on the daily, seeing what market is doing, marking out your POI, getting the alert, going to 5 minutes, looking for divergence, found divergence, looking for some confirmation in order flow and structure, and boom, execute with like 3, 4, 5 pips or points of stop loss. Getting the reward, you can see I marked it up. This was 1 to 15. I removed it, didn't I? All right, so now I can't. Yeah, so this was like 1 to 15, 1 to 16, and this one is going to be hopefully 1 to 50 if it goes all the way where I want to over there. Come on. Okay, 1 to 1. Wait, what? This is also 1 to 15. So 1 to 15, 1 to 15, but if it travels more, you know, it'll be 1 to something else. Okay, so that's biggest two cases that I wanted to go over. WWV indicator for. What is WWV? What's a WWV? What? Anonymous.
I wasn't sure either. So
I don't know where you see WWV. It's on my
your
screen. What? You mean weekend, Saturday, Sunday? What? Oh, this. This is the Wise Waves volume. So, okay, if you learn Wyckoff, and I'm talking about advanced Wyckoff, not just the schematic, you learn about each wave. So, like from here, the wives. Okay, hold on. Oh man, it doesn't even. I don't know how to pronounce it. Anyway, so this volume, Wise Wave Volume, WEIS, Wise Wave Volume, is the volume that measures each wave up or down in comparison to each other, that helps you determine whether or not you are in a distribution or reaccumulation. So that's as far as I'm going to go explaining it, because one, I am still learning it, and two, and I don't want to teach something I'm not 100% on, and two, it's quite complex, but essentially you're looking for divergence between this and that. So between, like, you see how this is going down, this is going up, so it tells you we're stopping this and going down. And other thing is the consecutiveness of bullish waves versus bearish waves. But don't worry about that. I'm gonna hide it so you don't distract yourself. Sorry, didn't figure out what WWV. Okay. Next question: can it be any time frame or time frame if you found your POI? So Charlie, as a rule now, I always look at my POIs at 4 hours and 1 hour. Right? So 4 hours and 1 hour, I usually mark out. The lowest I would go for a POI is 15 minutes. The absolute lowest I'll go is 15 minutes to determine the POI. I mean, at the beginning of the week, it's always daily 4 hour and 1 hour. So let me get rid of everything. So like I'd look, and this is Dow Jones, so it's a little different, but I'd look here, and on the daily, I'd look, okay, we're bullish, so we'll see. But on daily, I see a PI all the way over here and there, but because we're bullish and maintaining bullishness, you can't see nothing here, right? You can't see. So now if I go to 4 hour, now I'm starting to see there might be a POI here. So that would be my POI. On 4 hour, if I started out marking out right now, that is my POI here. So then I go to smaller time frames and actually refine my POI. As you can see here, the POI is these two purple lines, but the 15-minute, or actually 5-minute, maybe, it actually gives me more refined version, so I can see this imbalance and this last candle from which everything started. This candle is led to this break of structure right here. So now I know this is where the orders are. This is where institutions are going. So that's how I know my POI. But I saw it first time on 4 hours because I saw this imbalance in this candle here. So 4 hours, 1 hour, 15-minute, and then you refine it. You can refine it, especially if you refine it on smaller time frame and it didn't disappear. So the best, by far, the best POIs are the ones that you can look and see on a larger time frame, like 4 hours, right? And then you go down the time frame and the thing does not disappear, just just gets more precise, but it's still there. Then you know for a fact if it's on all time frames, multi-time frame confluence, you know that's where they're sitting. You know that's where the market will turn around, or very likely to turn around. But again, this is the extreme, so I would have a pending order there easily. But for my pendings, I have to go to super small time frames. And like let's say I'm going to bed right now after the stream. Boom, I'm gonna go here and at this extreme, like right here, I would probably, what is this? Yeah, this is only 10 points. Great. I'm gonna put a pending here, and I'm gonna put a pending here. I'm gonna go to bed. If it doesn't get hit, fine. Unless it hits my alert, and then I get up all of a sudden in the middle of the night, or I'd get up in the morning and I see what market gives me, and then I'll market execute if it didn't get hit. But if the POI was, let's say, is right, like there's no way I'm putting my stop loss of 30 points or something on a pending. There's no freaking way. I would rather wake up in the morning, look at the market, grab my coffee, chill the fuck out, and then wait for break of structure, wait for divergence like this, and enter. And then I'm safe because now I don't have to worry. Now I don't have to stress. I don't care, right? Because I did my due diligence. I did my analysis. I just spent a whole damn hour on 2 pairs. But I know the story. I understand the story. I know what they're doing. I can see the market. I can mark this out, and I don't know what's going to happen, but this makes sense to me. And then I can follow that story. And if I'm wrong, well, shit, I can then look and figure out where I was wrong. But I will never. Yeah, go ahead.
Oh yeah, and at that point too, when you're wrong, it gives us a lot more reason to kind of realize, okay, now we're detectives. Okay, why were we wrong? And you actually learn from those mistakes. But now you know that where it's going for sure, because if you're wrong, we just probably shifted the market. Now we just have to change our bias, or we were just impatient and too early, and the point of interest should have been lower. But I mean, it'll just, it's kind of like if this happens, then we do this. If this happens, we do this, and it's pretty simple. But if you didn't have the plan before, and you didn't actually have the bias and the idea of what in your head of where the market's going, and I mean, this comes from everything with your technicals, fundamentals, everything, and you have no plan, well, then you're just guessing. You're throwing darts.
Yes. So like I said, I will never I will never be upset about losing at all. Never worry about losing whatsoever, because I do these things. Recently, I started doing this. Like I do these things, and then I am completely confident when I get in. Like there's not a zero doubt in my mind. And sometimes, like I'm doing this now, found myself last week going like, oh, be my guest. Just take my stop loss. Go ahead. Freaking hit me. Then I'm gonna enter even lower. Just do this. Because like here's the only 2 points that can come. If I'm wrong, I'm done. Like if I'm wrong, I'm done with the spare. I need to reevaluate. But if it hit the first one, great. I'm gonna get in even lower, get an even better risk to return. And I never think, oh my God, what happens if I lose? Oh my God, I'm so stupid. Like, no, none of that. Because like it's honestly, market is like A, B, C, D, E. And then you have to the only reason you lose is because you don't understand why the market is moving a certain way. Once you do, though, it's either A, B, or C scenario. There is nothing in between. It's not random. It is freaking algorithm. So it's either they're going after sellers or going after buyers. And if you're wrong, change your bias. If you're wrong, then if you went through everything that I just said step by step and you're still wrong, then you missed something somewhere. And you wrote down everything I just said. So like what I wrote down about US 30. Let me look. Okay. So there we go. I'm saying daily accumulation, possible Wyckoff, entering based on divergence on a 5-minute time frame. There you go. So that's all I wrote. Unfortunately, I need to. But that's what I wrote. But anyway, that makes sense to me, though. That's enough for me, I guess. That I'm entering based on divergence 5 minutes, structure is bullish, and that there was a Wyckoff developing reaccumulation that I think it is. So there you go. So now if I'm wrong, I can see that you can be as detailed as you want. Like I'm entering based on the last order block, decisional or extreme. I'm following the source of breaker model, whatever it is. And then you know why you entered. And then you know why you lost. That means you go and reevaluate. Oh, I missed. This was already mitigated. So now there's a break of structure I missed or something. But like it's what I'm discovering when you do this top-down analysis like this is you becoming almost like impossible to lose. Because even if you lose by like, the only way I lose now is when it wicks me out and goes the other way. Like, because my stop losses are so tight, and it'll be a spread or just like tiny thing. And it pisses me off to beyond belief when it happens, but it happens.
Yeah, it's
It happens,
obnoxious.
especially when you're going with five pip or less stop loss, it happens. And then if I'm staring at the market, then I re-enter right away. If I'm not, then I just take an L. But I'm still happy because I got the thing. I got the story correctly.
Well, and another thing too, more often than not, if we have a really strong point of interest where we have all these things in confluence with each other, more often than not, if let's just say we're looking for a buy right there at that point of interest, it's going to probably blast through there with a lot of momentum. But what's it going to leave us with? An order block to the downside. So basically just we're wrong, but okay, now we're going to look for the opposite. We just have to switch our bias. It's as simple as that, because now it's going to prove. And then what do? We look at point of interest at the lower, and we look at points of interest at the top. So now we just shift our analysis. And so it just, the search continues, and we just move on, and we just, and not, no hard foul. Now we just know that, okay, now we have to do some homework. Okay, what did I not see here? And then once we get it, we'll talk about it like 3 months from now, because we'll remember. It sticks in your mind like that.
What an ugly ass pair. I'm sorry, I'm talking about EU, but it's so ugly. I can't even.
Oh yeah, it's been gross.
All right, so this is where I'd be looking for a buy for EU. I mean, the daily stuff still makes sense below over there, but because on this 15-minute, we're breaking structure to the top like this, and just literally not doing anything here aside from equal lows. And this IFC here is what Reem calls the enticement. So, and here's the Asian range here, and this is the midline of a previous Asian range. So this is very, very big chance that we're going to turn around in this area here. Very big chance. This is all clean. This is the last, I mean, this was already mitigated. This is the last point from which we broke the structure here. I mean, it's possible, like, I don't like this point here because it's equal lows here, but I mean, it could, I don't think it'll turn around here. I think this will get smoked until
We might
here.
have a little reaction. That's about it.
If not, yeah, if not, then we'll just go all the way. Where the hell did I mark it? Like way below. Then we'll be bearish until like there. Yeah, this is my point. It might come here as well. But I thought it was mitigated on a smaller time frame. I'm kind of more interested in GU because it's much more clear right now than this choppiness, craziness. But yeah, so I'm thinking when it comes here, look for divergence, look for Wyckoff accumulation for something. Yeah, low of the week. It's been also happening on Monday for this pair. Yeah, I like this area. If not, then probably be bearish on EU as opposed to GU being bullish like crazy. It's just ugly. It's been It's just been range. I mean, this looks like a very extended here reaccumulation. Again, this, I mean, yeah, structure wise, you know, bullish, bullish. We're creating this bunch of equal highs. We're still bearish on this on the larger time frame, so that's what you got to watch out for. Because if we don't react from here, like this below here or here, we're just going down. This was a complex pullback, and then we're going down. But I think we're gonna go up right now, at the very least, to over there. So we just gotta wait for it to come to this area. If I'm wrong, then we're just gonna keep going down, and then you gotta wait for, like Rand said, right? Wait for break structure, retracement, and go. But it's just such an ugly price action for the whole Friday and today. Once again, chilling, gotta wait, see what market shows us tomorrow morning. All right, this was good. All right, let me answer some questions. So please write questions if you have some. Otherwise, because my material for today is exhausted. The advanced side of Wyckoff. This guy, the hell is his name? Villanueva. Hang on.
Oh,
What the hell was his name? Oh, I could look it
a
up.
book in 2 languages, right?
Yeah,
Wyckoff
we have a bunch
mythology.
of links in our thing, but let me look at my account here, what I'm reading right now. Hang on. Give me a second. What the? Oh, it is Ruben Villahermosa.
Villahermosa. Yeah.
Yep. So Ruben Villahermosa has Wyckoff methodology in depth, right? So the book is here. I'm gonna show you. The book looks like this, right? I don't know what the Amazon cost
It's
is.
like $14 or something like that. $10, I think it's the ebook.
Yeah, I think it's
not-
like $15 and $20. But to this book, he has a second book on this, and he also has the unpublished stuff that only some of us get access to. So, but it's, I mean, this book alone right there has everything, and you can ask Mike Azevedo. He is the one who recommended me. It's freaking goldmine. This thing. So he talks about volume as well, the Weiss volume. So, but I also learned other resources that I can look up specifically for you. Just reach out to me, and I'll spend some time. I'll look up where I actually learned it originally.
Even my mom is reading that book.
There you go. So, yeah, even your mom. That's hilarious. So yeah, so that's the book. Definitely amazing book. I do not play with RSI, right? The only thing that I do with RSI sometimes now, but again, the trades that I showed you last week, they had so much confluence and confirmation that I didn't need anything else. Like there was too easy almost. So with the RSI, the only thing I use it for is Wyckoff confluence as well. But even that, very rare. So like, where's ES 30? So here, say 15 minutes, if I bring up RSI, okay, boom. If we bring up RSI, you can see how as the market moved up here, the RSI was divergent, right? So that can actually give you confluence, but it's elusive in the sense that right here, you have divergence. If you try to use this for entry, you're going to get smoked several more times. How do you know to take it here or here or here or here or here? Way too many, or here. Like this just keeps going. But if you, I mean, now that I showed you where everything happened, yeah, it's still legit. But you can see that as this going up, this is already going down. So you could use this. Like for me, I identify that RSI, regardless of the entry, is going the opposite way as this is going up. So I know to look for distribution as opposed to reaccumulation here. So that's what I use RSI for, but not for entries at all. Where do you learn it? Oh yeah, we did this, we did this, we did this. In the Academy, Tabitha, if you're in IM Academy, first of all, I'm not going to be me if I don't say you should join us. That's the only educators you should learn from is me and Ryan.
That's right.
But no.
Plug.
So
plug.
there's definitely educators to learn from. I'm gonna tell you my personal, where I learned from, and my mentor was, and my upline was John Fibonacci. Right. That's I'm gonna tell you, the guy is smartest out of all trade houses. If they lose John Fibonacci, if they don't make him an educator, which is what he's working on, the dude, it's gonna be dead. So John Fibonacci is number one. Number two, a very underrated trader out there is Sandy Casper. Right?
Sandy Casper, yep.
He's not very present on he doesn't share charts in Discord and all that, but the man is an 8-figure trader. The dude is, I'm telling you, he knows how to trade. And he has way more patience than I can handle.
Rock Kumar is awesome. He's a beast.
Rock Kumar is awesome as well. Those are the three. That's it. For mindset, Mike Miles. But for trading, those three. That's it for me personally. Don't have to go there. That's just for me where I learned from. But I honestly, to God, I learned the most from the books and from back testing. But if it wasn't for them, I wouldn't even know where to learn and how to learn and what to look at. So those three. Started it all. Zach McDonald is good, but he's a little bit way too basic
style.
for me.
He's got a different style.
It's not my style, but
right.
That's how I met Ryan.
Yeah. I read that Wyckoff book on our trip to London. The whole
Second
thing.
question for you. How long did it take you guys to learn all this with the educator? So I did tell you about the educators, but how long? That question is very complex because it's up to individual person. It can take you 1 week, or it can take you years, and you're still not going to get it. So it just depends what kind of person you are. And also the style as well. But honestly, there is material for 2 weeks to learn. To learn all this stuff, 2 weeks. And after that, it's all about back testing.
Application, right?
Okay.
And it helps to have a trading partner.
It's one of those things. You can learn about derivatives and integrals and upper math calculus, the actual concept of that, pretty fast, in a month. Are you going to be able to apply it to resolve complex problems? Up to you. Got to practice. Got to develop the stance. You understand that for me these days, all of this analysis takes a long time explaining, but it doesn't take me that long to chart it at all. I understand. I look at the market within 5 seconds. I can find structure. I can find all this stuff. And still, I go in and I backtest every day the hell out of it. I'm practicing because each time you discover something more. Also, I'm an educator. So as I'm educating people, a lot of times I discover things, new things, as I teach. I've
learned a lot from that alone, because sometimes you see it with different eyes. You find that you get questions asked you've never thought about before. So now you have to go back and research what they were talking about, and then you learn something totally new that you never thought about. It's amazing. Yeah, it's gotten to the point, Tabitha, where Yuri and I will be talking on the phone, and I know exactly which area of the market he's talking about because we've studied so much. It's just that we look at it so often and we know what each other's thinking. So it kind of helps that way. I would say probably get someone you're comfortable studying with. That'll speed up the process because maybe they might see something you don't, and you guys could discuss it. It really helps, and then it keeps you accountable as well. And that's the biggest thing, accountability. Another thing that helped me and Yuri, we'll talk about that as well, is make sure you have a plan in place, a trading plan, and have all your different rules of what you're going to look at in the market, your routine, what's your confluences when you're actually taking an entry, what certain tendencies you have that you make mistakes on. Because if you have that in front of you, and then you take your trades and then you get to look at kind of like, okay, I lost this. Why did I lose this one? Everything was perfect. Everything was set up. You can actually evolve. And and then you can also see your progress because Yuri and I will look at our trading plan from 6 months ago and laugh at it. It's just amazing how fast you can evolve. But if you don't have a place to start, you're never going to be able to evaluate and grow.
So we'll look for one. Not sure what that was referring to, Tabitha. How do you know the market is doing pullback, retracement, or the structure you're changing totally? What do you mean? External structure versus internal structure. So I'm still sharing the screen, right, Ryan?
Yeah, you still got it. I'm done with my rant.
So let's look at something besides indexes. Let's look at Euro GBP. No, let's not look at this. Freaking hold on. Where is my GU? There, my favorite pair. So how do you know the market is changing totally, or if it's a retracement? Well, look, if you mark out the way I had it here, if you mark out your structure, and you can see that right here, for instance, let's go from here, right? So when we have this big sell-off, market is changing totally. I can say we broke all the structures, so now we're in like we're selling, right? So right here until this point right here is broken, we are bearish, right? So realizing that though, this is on daily, right? So if you were to mark this out, okay, I have it marked out, right? If you were to mark this out, I actually went from the weekly. So on the weekly, where are we at? This was here, right? So we made this weekly low, and this is weekly high. So this is years, right? This is 3 years. So technically, we're still bearish, right, on the weekly, but we are in a retracement, right? So until this point here is broken to the top, we're still bearish on the weekly, right? When we go to daily though, this was the high, or this was the high. We made a low, but then we broke it. So now we are on a daily, even though we're weekly, we're retracing. On a daily, we're bullish. On a daily, we're bullish. So you just look at external structure. We're bullish until we actually break the last low, higher low that made the high, which is here, right? This low is both daily and 4 hour. Excuse me for having all in one chart. I was just doing an exercise with our guys. But yeah, so daily, now we go to 4 hour once again. The external structure, what is you always ask yourself the question, if this is the higher low, why do I think this is a higher low? Or because this was the lower high, this was a low until this got broken. If this got broken from here, which is right here, This is the low, but truthfully, on the daily though, until we broke this, we weren't, you know, this low wasn't confirmed. But on a 4-hour, if this low was broken, now we're bearish. As long as this low is not broken, all of this pullbacks, that's a pullback, because this lower high, if you thought this was a lower high, it's not confirmed until this is broken. So it's external structure that determines whether or not. So look at this right here. Here was the high, higher high, right? You could have said, well, okay, Yuri, well, if this was the low and this broke it, then we're bearish. Well, you were right. We were bearish because this low created this lower high. This was still good. Now this one is still low, so we should be looking for a sell. We're looking for a sell. We got it. We came here. All of a sudden, this low creates a higher high. As soon as that happens, and this high is broken, as soon as this happens, this no longer is the lower low. This is the higher low, because from this low with a little pullback, this high got created. From this low to this high is now my external structure. So we're bullish until this low gets broken. This came all the way down, breaking this internal structure, but we are not switching the trend because this low has not been violated. So now we're still bullish and this becomes a higher low. But this higher low is not confirmed until this high is broken, which it is. So even though this is a kind of a point of structure, it's in between this whole lag, right? This low is maintaining bullishness. So even if these lows, these equal lows, all of this was broken on 4-hour only until this low is broken, we are not bearish until this low here creates this high. So if this low created the high, now we're just going here. This low didn't break this low and created a high. Now we're in here. This low breaks the high, creates new high. There's a matching high to this low. So now we're looking in this leg. As soon as this leg is broken, we're bearish. Until that, market, for all I care, could do this. Break all of these lows. But until it breaks this low, this is just a complex pullback. So that's how I know that this is a pullback. If this gets here, now we're bearish on 4-hour. Make sense? Hope that makes sense. So I didn't confuse you.
That's also how you
Forget
took that
fibs,
entry.
right? The reason I say forget fibs, now fibs are still good for extra confirmation, but the reason I say forget fibs is because people get into the habit of guessing. It's going to retrace to 71. It's going to retrace 78.6. It's going to retrace to 50. It's going to retrace to 61. Well, you got to only execute if it retraces below 50. You don't have any confirmation other than guessing. Right? I'm not guessing when I enter. I'm like dead confident this is where it's going. But as an extra confirmation, it's good. Right? So break a structure is actually going to be the singles thing, because have you ever seen, I'm gonna see if I can find an example. This is actually a good example here on the daily, right? If you were looking at the fibs, well, it can still give you on a pips level good, but here's the thing. Lower low, higher low. It goes both ways, right? Breaks this and breaks this. Are we bearish or bullish? If you put a fib from here to here, you get smoked. So that's the fib problem. But if you understand structure and we're bullish, once we break this, and this is the lag from daily low to daily high, now you can put a fib here. I retraced to 78.6. Now you can put a fib here. But again, I don't use fibs anymore. other than Axer Confluence. I would rather see this going into a POI over here and having us on a smaller time Wyckoff accumulation or a divergence. And then fib, it is relevant at that point. I'm not putting any pendings or anything. I'm letting the market show me, oh, I'm switching. Because if this is your POI on 4 hour or daily, and then you come to 2 hours, that's a big difference between daily and 2 hours. You come to 2 hours, it's over here, right? And then you come to 15 minutes. And in 15 minutes, you see this bright as day, right? Wyckoff accumulation. And then you see on top of that, from here to here at divergence with let's say EU or something, that, you know, and as soon as this happens, boom, here you enter there, right? So as opposed to looking at some fib level. Okay. Cool. How do you get access? Charlie, what do you mean? How do you get access to Furious Snipers? If that's what you're talking about, just DM one of our Instagram handles, and we'll let you know about that. So if you just go to @LordFury83 or @Ryan Billenberg or @Furious Snipers LLC, send us a message and we'll tell you all about it. We welcome all new members, you know. It's simple. You talk to us, we'll tell you the cost, you get in, you get mentored. Now,
Part of the family.
the answer to that question is you join our squad. You join our squad, you have some resources. We have long arms. And we know a lot of people. Oh, you can also reach out to us on Discord. I forgot about that. Yeah, we're in Discord. Other questions? No questions? All right, guys, keep it real. This was awesome. Thank you all for attending.
That was a good session.
Especially people who are tuning in from UK. I appreciate you guys. Thanks so much for coming. We'll see you on the next Sunday around 6 p.m. unless I delay it again. But take care, you know, trade easy, clap easy, and let's get it.
Take care, guys.